Hey guys, Rajiv here from Financial Hub India. So today I'll be covering one trading lesson, and the lesson is about time frames. So in my members, I have seen there is a common issues and people are struggling to understand the time frames. If you are a intraday trader, especially, because if you're a higher time frame trader, then you don't have much choices. So you go ahead with a 60-minute and daily time frame trades, but when you are an intraday trader, then you really suffer in this confusion that which time frame to trade actually. It's a 1 minute, 3 minute, 5 minute, first of all. Secondly, the problem is how to combine those lower time frames with the higher time frames, because most of the trades which are in line with the higher time frames, those are the successful one. The most of the trades you should be choosing the intraday trades which are in line with the higher time frames, or maybe it's not in line, maybe the higher time frames is in sell mode or the lower time frames giving you a buy signal, but at least it should not be countering the higher time frame trades, higher time frame price action context. All right, so uh, like you should not be buying something in 1 minute or 3 minute in a place where it's a key resistance for a higher time frame. Definitely, that's what I want to mean when I say countering the higher time frames. All right, so uh, then again the confusion becomes that okay, then when I open the chart, then I'll start directly from 1 minute, 3 minute, 5 minutes, or I go to the 60-minute time frame first or daily time frame first, and from there I come down to 60, 15, 5, and then I take a trade in 1 minute or 5 minute maybe. So right now I have an this idea I'm sharing with you because right now we have some trading opportunity over here, where I can really show you the thing I wanted to explain you based on the time frame confusions. So generally, the general rule is you are not supposed to dive into the 3 minute or 1 minute or 5 minute time frames directly. Let's say Nifty, you want to make a trade. You should not directly go into the 5 minute or 3 minute time frames and open the chart and you will start analyzing that chart and have a trade. That's not the right way, because you don't if you do that, then you don't have the higher time frame context in place, right? So which of the scenarios you are directly can go to the 1 and 3 and 5 minute time frames, and without looking at higher time frames anymore, you can further take trade decisions based on those lower time frames. So today, right now, I have that kind of opportunity here. These are 3 minute time frame charts. Let's go dive down to the 1 minute time frame chart. And in 1 minute time frame right now, this is today's 12th of March, and right now we see a trading opportunity over here in a 1 minute time frames. It's seen clearly in 1 minute time frames based on price just opens up over here and then sustaining. I'm not actually done yet, so I'm just giving you the picture over here in 1 minute. Then I'll go back to the higher time frames and I'll explain more to tell you that why really we can directly go down to the 1 minute time frames and take a trade right here. So right now what I'm doing I'm just opening the chart, all right, in 1 minute time frames. I'm not seeing anything else here, either or neither, all right, and I'm just seeing okay, I have a resistance, and okay, the price is really sustaining, making this triangle formations where we have this squeeze of the higher lows, which is a very good sign. Yeah, and this is a nice layer of breakout level, and we can go ahead with a trade right on this key layer. Right, so based on that we can go ahead with the trade in this. But would we do the similar thing yesterday? This is today's chart. So would we do the similar thing in the yesterday market? So yesterday the market started where is it? Right from here 9:15. So all these lines you're seeing, these are the daily lines. All right, so you forget this. Let's assume we don't have these lines. So the way we have seen today's market, open the chart. going to the 1 minute time frames, marking the key layer and trading it. This is yesterday market, and market opens up over here and then goes up, goes up, goes up, goes up, goes up, goes up, goes up. And should we find a trade the similar way just based on the candles forming on the same day? We should not. We should not. So where is the difference? These daily lines you see, these daily lines, are countering this upward momentum. And if I'm not seeing this daily chart yesterday, then I don't have these daily lines, which is a key resistance zone. All right, and my overall long-term view is missing in this chart, which will cause a problem while analyzing your price action chart or taking a decision to trade in a 1 minute time frames as well. All right, but if you go ahead here in 1 minute time frames, here that is not the situation. That is not the situation happening in here. And why so? So let's go back to yesterday market update. So yesterday I gave an update in the free channel. I'll give you the link in the description box. You can come in. So this was the yesterday market update. Here, this is the resistance layer we have. This is the resistance layer we have. And the price was really breaking out this layer. And the price was breaking out this layer after what? After a long consolidation momentum. The breakout here, it failed. And there was a drastic sell-off. But since we have so many times of order flows, rejections, order flows over here, then the order flow, if the order flow is getting rejected from this level, then that would be great really in terms of the selling. But once the price was able to cross this layer, this key resistance layer, then this is more probable, to break this layer of resistance as well. So anyhow, till the time we are not breaking this layer of resistance, we are not going for a breakout trade. So after a consolidation momentum, first breakout failed, but the second breakout is working out right now. All right. And what is one of the sign you can get in here of this breakout working out? That is when the price was breaking out in this layer and it was falling, it was not able to make, a higher low kind of thing. Because if you see both the momentums, in this momentum, this was a strong move up, and this was a strong move up as well. But when the sell-off really started, here, we don't see a pushback from the buying side in any way, which was not the scene in here. It was a stoppage on the resistance, and then a higher low and the next move. So if it's a genuine resistance based on the order flows, if it's a genuine sell-off pressure right from here, because of which the price is falling, then we shouldn't see this higher low build up anymore. Obviously, the buyers should not be coming here and pushing up the market from right here. So that's what is all about understanding the order flows. If you understand the order flows, then the pre-breakout scenarios you can understand better. So you have the resistance here, and then if it goes above this, if this breakout is successful, then we are really targeting this much. The next layer of resistance. In between, we have this layer of key layer, which are the minor layers, which should be used as a first layer of target. But the kind of momentum we are seeing in the market, then breaking these layers won't be a tough case really. So our ultimate target will be this one. Then in between, we'll keep an eye on these areas to see the price action order flows. So now, as I said yesterday, being bullish, we'll try hunting trades using both lower and higher time frames charts, because these are daily time frame charts we are seeing here towards the upside only till the price action order flow remain unchanged. What I mean by remain unchanged and not showing us some kind of order flow reversals, we want this momentum to continue. You'll see this momentum. Till the time this momentum is continuing, we are in this trade. We'll be looking for lower time frames, higher time frames to get into some trades. So in between these two lines, we can use any kind of lower time frame chart on its own. That's okay here. That's okay here. So in between these two lines, if I just open a 1 minute time frame chart, which is the scenario here today, and I see, okay, we have just 1 minute time frame chart, and we have this resistance, 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 and then there's a breakout and pullback trade. We can go for, why not? We can go ahead for a trade over here as well. All right, but when the price was breaking out, yesterday, oh, where is it? When this breakout was really happening, and imagine you are doing the similar situation, you are doing the similar analysis, just opening the 1 minute time frame chart and coming into here for a trade opportunity, that won't be fair. That won't be fair, because this is a key resistance. So either you are going above this or you are going below this. You are sitting right in front of a key layer of resistance, the higher time frame key layer of resistance. Yeah. So if you just open the 1 minute time frame chart yesterday and you see zoop, 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 strong momentum up, then obviously you are looking for a buy entry in any way. But we are not supposed to look for the buy entry in this area. Obviously, that's a long-term key support layer. That's a long-term key resistance layer. You're right here. You're right here. I mean, if you're assuming, okay, it just worked out, so that's not the case. But that's a wrong way to see the market. That's a wrong way to see the market. The breakout was successful, but that's a key layer of resistance. So you can't ignore that. Right. So if you just seeing 1 minute time frame, opening up 1 minute time frame, in that case, you will be missing the data from the higher time frame charts, which is a problem. But as we have the overall view of the long-term charts now, and we know that, okay, the momentum is on, this momentum was successful over here, and there is no as such resistance to stop the market anymore. Everything is going fine, fine, fine. And also, you know, in this momentum, even you have a trade opportunity coming in here as well. Our trading strategy really triggers around this layer. This was the support layer, and this analysis to go long, to go for a long entry over here, we did it based on 5 minutes time frame, 5 minute, 3 minute time frames. But it happened when the market started trading above the long-term key layer. At that time, we shifted to the 5 minute and 3 minute time frames, and we started tracking that. When the you know when the hurdle is clear. Now, what was the hurdle? The hurdle was this one. Once this hurdle was clear, we started trading the market using simply lower time frames, 5 and 3 minute time frames from yesterday, only. Yeah, so that was the trade based on 5 minutes. Then it moves up, and we have today we open with a gap up over here, and yeah, this is another trade based on 3 and 1 minute time frames. And similar way, you can go ahead with the trade towards upside. But again, that depends how long you are going to follow 1, 3, and 5 minute time frames. How long you are you're going to follow till the time the momentum is alive. So here, so till the time the momentum is alive and the order flows are in line. So what I mean by that, the momentum is aligned and order flow is in line. Right now, if you see in 15 minute time frames, you don't see much of a swing over here. So right now, what is happening is in 1 and 3 minute time frames, there are minor swings are happening. You see the minor swings are happening here. So the price action order flows are very much strong. The momentum is very much strong. The price is moving without giving us any kind of major swings, any kind of major pullbacks. But that won't be the case all the time. If we are continuing that momentum, maybe 1 or 2 days, there will be some long pullbacks coming in. There may not be, but there are chances because it's a long distance from here to here. So you can't expect the market to go bzz. No, that's not going to really happen. When most of the time it may happen, but most of the time it doesn't happen. In 70 to 80% situation, it doesn't happen. So first, the price always started giving you in a strong momentum market. The price starts giving you pullbacks in lower time frames in a small swings. All right, and then when the market is really exhausted, it moved up so much it moved up so much, and then it starts giving you long pullback. So it doesn't mean that the trend is changed, the momentum is changed. That's not the case. It only means that, okay, the 1 minute, 3 minute, and 5 minute time frames are not supposed to be followed now. Now you're going to follow the 15-minute or 30-minute time frames, because that you start seeing the pullbacks in 15 minutes right now. I mean, whatever you're seeing in 1 minute, this minor pullback, the minor swing, the similar thing you start seeing in a 5 minute time frames. Right now you can't see anything, but the similar thing will start happening in a 5 minute time frames, and then a 15-minute time frames. Then when the price will get volatile, right now it's not volatile, it's not volatile. When the price will get volatile, then you will start seeing it in the 60-minute time frames. So when you are trading these time frames 1, 3, 5, you are supposed to know actually when to shift to a bit higher time frames, when it's time to shift a bit higher time frames. Now, how to understand that? When you see the 1, 3, and 5 minute time frames, order flow got changed. All right. So that's it from this session. Hopefully, this session will help you to understand the market and to trade the market using the lower time frames. But as I said, you should be knowing where till what time you are supposed to trade trade that particular time frame. So there is since it's a 1 minute time frame, 3 minute time frames, the more lower time frames you go in, the expiry of those lower time frame skill levels will be more faster. More faster. So you need to be very much cautious while trading these lower time frames. So this is right now, this is the key layer of resistance, and this is where you're supposed to go inside the market. That's it from this session. I'll see you guys at the new lesson someday. Thank you. Hey guys, Rajiv here again. I just recording this part just to explain you the trades we have discussed a few minutes back, which was 1 minute time frame trade, and the key resistance we've been talking about, and buying it over here. And you can see a nice momentum is coming in over here. Now the best part is here is when you go ahead with a 1 minute time frame trade. This is a purely 1 minute time frame trade. What we discussed about the risk and reward ratio is really too nice. Here when you buy it here, actually the stop loss is not more than 6 to 7 points at the max, but already we are making around 20 to 25 points, I guess. What was this? This was 75. This is 97, 98. Now it's going on. So we are making almost 1:3 plus, 1:3 plus within such a short period of time. So these are the opportunities you get really in 1 and 3 minute time frames. There are quick money you can build up. That again depends. I mean, how much target you are going for, because as I talked about this yesterday, we had a trading opportunity over this support zone. So over this support zone, we had a trading opportunity here. And if you are long in this, obviously we are long in this because our ultimate target, as we discussed here, was this, and we already talked about this. These will be considered as our first target. But in the meantime, you will have to trail your stop losses, right? So you leave the position here. This is the market opens up with a gap up, and then to trail your stop loss right from here, you can go ahead with the trailed stop loss right below your key level over here, right, which was the stop loss for a fresh trade over here. So either way, there are people who don't leave the position with the fear that, okay, tomorrow what will happen, gap up or gap down, and some kind of those kind of thoughts. So even if you're not carrying the positions, just by following the higher time frame and lower time frame context and doing the intraday, you can make still good amount of money over here using the 5 minute time frames. You see, even yesterday on this support zone, you got a good move. Even if you're going ahead with a first target kind of scenario, then yeah, around this layer you can exit around this layer. And for today, if you're going ahead, because yesterday we had a good swing. Yesterday we had a larger swing over here, isn't it? So you have a good target over here, more than 1:3. This one, but for today you may not go ahead. Obviously, you will not go ahead with the target of this one, definitely, because you are too much close. You are too much nearby. So in these scenarios, either you go ahead with the target of 1:3 minimum, which you already achieved over here. Otherwise, since we have the entire day, this is right now it's around 10:20. We have the whole day left. Then why not trailing your stop losses? Why not trailing your stop losses once you are in this trade? Because you will be exiting with the 1:3 over here. But imagine this move continues, and that's we have more probability, more chances for this move to continue further. We don't know whether it will reverse or no, but since it's been continuing, why not riding it as far as you can? Why not? And since we have a very large target, very long-term target we have in place. Everything is good. There is nothing to stop in between in here, you know. And we are just on day 2 of the breakouts. Yesterday we just had the breakout. This is just day 2 of the breakout. So generally 1 or 2 to 3 days you should be moving up generally, but it may not happen as well, and that's why we are trailing the stop losses over here. So why to exit with the 1:3 ratio? Because the way we trail our stop loss is based on that. This trade over here, if you want to sit in this trade without exiting with 1:3, if you wish you can, but without exiting with 1:3, if you want to trail the stop losses, right now your stop loss will be on break even. Not in break even, actually. Your stop loss will be in with some +1 or profit. The way we trail our stop losses, generally based on those theories, you are already sitting with a +1 hour profit, even if you hit your trail stop loss. All right, so the idea is try to write the trade out whenever you are writing that trend, that trade. So the best trader is he who makes the most of the money, makes the maximum of the money when he's right, and he exit the market as soon as possible, as early as possible when he's wrong. All right, so try to capture those kind of momentums, and try to trade the trend. Basically try to trade the trend as much as you can. All right, so that's it from here. I'll see you guys with a new trade hopefully. Thank you.